Today I want to talk about Bitcoin's bull run, pausing or poising, and end of year 2025 outlook. Now, Bitcoin reached a new all-time high of 124,492 on August 12, 2025, only to pull back sharply to a low of about 107,340 by the end of the month. Now, this kind of correction is not unusual in Bitcoin's history. After rapid climbs, the market often sees profit-taking and leverage flush-outs before it can stabilize. Now, to get a clearer picture of where Bitcoin might go next, it is useful to look at the liquidity trends, institutional ETF activity, seasonal tendencies, technical levels, as well as sentiments. So the first to look at the liquidity, that would be the stablecoin issuance and liquidity. Now, stablecoins provide one of the best measures of liquidity in crypto markets as they represent funds waiting to be deployed into risk assets. Now, between November 2024 and August 2025, roughly 67 billion in new stablecoins were minted across USDT, USDC, and Euro, EURC, sorry. Now, key periods included December 2024 and January 2025, which saw surges of over 10 billion and 9.5 billion respectively, while the July and August 2025 together added another 18 billion in supply. Now, here's the look at the charts which I've collected. Okay, man. So by late August 2025, the total market capitalization of the top stablecoins has reached record highs. USDT stood at around 167.3 billion, USDC at 70.6 billion, DAI at 55.4 billion, FDUSD at 1.45 billion, for a combined total of about 245 billion, sorry. Now, broader trackers, right, that include smaller stablecoins show the entire sector above, right, above 275 billion. These record levels confirm that liquidity remains abundant and there is significant dry powder available to support Bitcoin's next leg higher. Okay, so we are seeing this money printing is still ongoing. In fact, if you look at August, the money printed is more than July and even more than June. Okay, only to lose out and the May one before that big move up. Okay, so but it's slowly accumulating as well. Let's see. Next is the institutional ETF flows. Now, institutional ETF flows have been central to Bitcoin's 2025 performance. In July, US spot Bitcoin ETFs recorded about 6 billion in net inflows, part of a record-breaking 12.8 billion across crypto ETFs. This wave of demand fueled Bitcoin's rally past 120,000. Now, however, in August, flows reversed. Spot ETFs saw heavy redemptions, including a single day 2.6 billion withdrawal from BlackRock's IBIT, and Bitcoin's price fell in parallel by about 16,000. The correlation was clear. When institutional demand slowed, Bitcoin lost momentum. Now, to interpret ETFs flow correctly, it is important to distinguish between time frames, right? Daily flows capture short-term ripples and can look volatile. Monthly flows reveal the momentum of institutional appetite, while cumulative net flows show the bigger picture of whether institutions are still net buyers overall. Now, despite August weakness, right, cumulative flows remain positive in 2025, meaning institutions have added more to their Bitcoin position than they have withdrawn. In other words, the August outflows reflects profit-taking and portfolio rebalancing after a sharp run-up rather than a full-scale exit. Now, institutions tend not to abandon positions all at once. A useful analogy is to think of ETFs flows as water. Cumulative flows sets the reverse direction. Monthly flows are like the tides rising and falling. And daily flows are like the ripples on the surface. The river is still flowing into Bitcoin, even if the tide pulled back in August. Okay. As for seasonal trends, seasonal patterns in Bitcoin also support a constructive view. Historically, August and September are weak months, as you can see from the chart, the diagram here. While October and November tend to be the strongest of the year, on average, October has delivered gains of more than 20%, and November has averaged returns of over 40%. So in 2025, August closed negative, which is consistent with this seasonal tendency. So if Bitcoin can hold its support levels through September, historical patterns suggest that the market could see renewed strength in Q4, potentially repeating its past end-of-year rallies. Okay. Now, as for the technical levels, Bitcoin has slipped below the 110 zone, turning what was previously support into short-term resistance. Now, the heat map now shows heavy liquidity sitting between the 109 to 110,000 area, suggesting any rally back into this range will likely face selling pressure from trap longs. Now, the 3-day view reinforces this shift as resistance has compressed down, leaving buyers with less room to reclaim higher grounds. Now, on the downside, the next areas of defense lie low with notable liquidity concentrations around the 108,000 area and deep classes of near 107,000. Now, these levels will be closely watched as the market's new battleground if buyers can reclaim and sustain a move above the 110,000 area, the state of structure stabilizes and momentum could turn bullish again. But if pressures persist, a slide towards 105,000 or lower remains a clear risk right down here. Okay. Now, as for the overall sentiment and positioning, sentiment is cautious but not as extreme. Okay, it's not as extreme. The fear and greed index sits at 40, which reflects a tilt towards fear, though not outright panic. This suggests investors are more hesitant after the August pullback, but the market has not collapsed into capitulation. Now, funding rates in perpetual futures are only slightly positive, suggesting traders lean slightly long, but without the kind of overheated leverage that often precedes sharp correction. Okay, so this setup indicates that market has reset after the August pullback, flushing out excessive optimism while avoiding capitulation. So in conclusion, Bitcoin's August setback was sharp but not abnormal within the context of a broader bull cycle. Liquidity remains plentiful, with 67 billion in new stablecoins minted since late 2024 and 245 billion base of stablecoins available to re-enter the market. Now, ETF flows, while negative in August, remains net positive overall in 2025, confirming that institutional engagement is still strong. Seasonality suggests the possibility of renewed strength in Q4 and critical technical support around 107,000 has so far held firm. Taken together, this signal suggests that recent weakness was more of a healthy reset than a structural breakdown. So if Bitcoin maintains its support and liquidity continues to flow, the conditions are in place for a retest and potentially a breakout above 124,000 peak before the year ends. Okay, so unless there's any news catalyst, right, that changes these fundamentals, whatever we have right now, whatever we are seeing, it's still supporting the narrative that Bitcoin could still move much higher. Okay, so with that, that's the fundamental report for today.